Things to be financially aware of for 18-year-olds and young adults. You've been warned. Number 1. Develop self-control. If you're lucky, your parents had given you this lesson when you were a kid. If not, remember that it will be simpler for you to manage your finances the sooner you learn the skill of delaying gratification. When you receive your first credit card, you'll feel incredibly satisfied, and carrying a credit card around can give you a sense of financial control. Although you can quickly swipe your credit card and buy whatever you want anytime, it would be wiser to wait till you have enough money saved up. You should only use it for goods you can pay off within a month. Do you really want to pay interest on a jacket or a soda can if you give it some thought? You might still be paying for those products in 10 years if you develop the practice of making all of your purchases using a credit card, regardless of whether you can pay the balance off in full at the end of the month. If you want to continue using credit cards for the ease of use or the perks they provide, make sure you always pay the whole balance when the bill comes. Also avoid carrying more cards than you can manage. This money advice is essential for building a solid credit card history moving forward. Number 2. Establish a budget. Your budget should be one of the first things you consider. Make a note of your income, such as your paycheck, as well as your outgoing costs, such as credit card, student loan, phone, and auto loan payments. Separate your needs from your wants, such as dining out versus your phone and car. It's also a good idea to set aside some cash each month for your retirement and savings accounts. Subtract the total of your monthly bills from your past tax income. Limit your expenditure if it exceeds your income in order to build up funds for the big move. Here are some pointers to help you get started. Look over your list and challenge every expense. Hold off on impulsive purchases until you have decided what you really need and what you don't. Before making a purchase, consider if you truly need it, how you'll pay for it, and whether it can wait. Then, to reduce your credit card debt, try using cash exclusively or a debit card for a month. Number 3. Take charge of your finances. Others will find methods to handle your money for you if you don't learn how to do it yourself. Some of them might be unjust, such commission-based financial advisors who lack morality. Others may have the best of intentions but lack expertise, such as your great Aunt Susan, who sincerely wants you to purchase a home even though you can only afford a precarious adjustable-rate mortgage. So take action and pick up a few fundamental books on personal finance rather than relying on others for guidance. When you are knowledgeable about personal finance, don't allow anyone to catch you off guard. Whether it be your partner who steadily depletes your financial account, or your buddies who insist on taking you out every weekend so you can spend a ton of money. Number 4. Understand where your money goes. After reading a few personal finance books, you'll understand how crucial it is to ensure that your spending doesn't outpace your income. The greatest method for doing this would be budgeting. You must pay close attention to where your money is going for a budget to be effective. It's crucial to monitor your income and keep track of every dollar you spend. Once you see how much your morning fix costs over the course of a month, you'll understand that making tiny, reasonable changes to your regular spending can affect your finances just as much as receiving a raise. You will ultimately save a lot of money if you keep your regular monthly spending as low as possible. You might soon be able to buy a great condo or house if you don't waste your money on a high-end apartment right now. Having visible evidence of your spending patterns also encourages you to consider your purchases more thoroughly. Keep in mind that a budget is only as useful as your awareness of your monetary inflows and outflows. Number 5. Establishing an emergency fund. Pay yourself first is a phrase you'll frequently hear in relation to personal finance. It's wise to find some amount, actually any amount of money in your budget, to save in an emergency fund on a monthly basis, regardless of how little your paycheck is, how much you owe in student loans or credit card debt, or how much debt you have overall. Savings can actually keep you out of debt and improve your quality of sleep by giving you cash to use in an emergency. You'll quickly have more than just emergency cash saved up if you develop the practice of saving money and considering it as a non-negotiable monthly expense. You'll have enough cash saved up for retirement, a trip, or even a down payment on a home. Don't simply hide this cash under your mattress. Put it in a certificate of deposit, money market account, or online savings account that pays high interest rates. Otherwise, inflation will reduce the value of your funds. Number 6. Begin putting money aside for retirement. Because of the way compound interest works, one of the things that one needs to plan for well in advance is retirement. The sooner you begin saving, the less initial investment you'll need to make. To be left with the amount required to retire, and the sooner you will be able to call working on an option rather than a necessity company. Sponsored retirement plans are definitely worth considering. Additionally, because you can contribute using pre-tax money, many employers will match a portion of it, effectively giving you free money. Finally, the contribution caps are often high, exceeding what you can put into an IRA by a significant margin. Number 7. Become tax savvy before receiving your first paycheck. It's fundamental to understand how income taxes operate. You should be able to determine whether a starting wage from a company will leave you with enough money after taxes to achieve your financial commitments and goals. Fortunately, there are many online calculators available to do the tedious task of calculating your own payroll taxes. These tools will display your gross pay, how much is deducted for taxes, and how much is left over, also known as net or take-home pay. Number 8. Secure your wealth. You must take specific precautions to secure your money if you want to make sure that it doesn't all vanish. Get renter's insurance if you're renting to protect your home's belongings. Your biggest asset is safeguarded by disability income insurance in the case of a fire or a break-in. The capacity to generate revenue by giving you a consistent income in case you ever experience extended absences from work due to illness or injury. Find a free online financial advisor to offer unbiased guidance if you need help managing your finances. That serves your interests more than a commission-based advisor who receives payment when you sign up for the investments that his or her firm supports. You'll want to preserve your wealth from inflation and taxes, which you may do by making sure all of your money is producing interest through investments like money market funds, high-interest savings accounts, certificates of deposit, stocks, bonds, and mutual funds. Number 9. Make future plans. For one to succeed financially, one must create goals. Saving is really important, but before you begin putting money aside, you need to have a clear understanding of what you're doing it for and why. These goals may include purchasing a car or home, returning to school, getting married, beginning a family, or accumulating enough money to quit your job and explore the world. Knowing your goals can help you better determine how much money you need to save and develop a plan to make your ambitions a reality. Number 10. Learn to prepare meals for yourself. Fast food is neither healthy for your wallet or your waistline. It would be in your best advantage to prepare meals that are economical in order to save calories and money. Instead of eating out every day at noon, learn how to prepare healthy, delicious dinners and pack lunches that are far lighter on your wallet. Before you leave for work, pack some munchies. The increased sodium and calories from processed foods and restaurant meals can add up to expensive costs. It's also crucial to prepare your meals according to a plan. How this affects your finances will shock you. You'll probably find that your grocery budget takes up a sizable portion of your total spending. By preparing your meals in advance, you can shop more efficiently and spend less money by just purchasing what you actually need. Additionally, it means that you may do all of your weekly shopping at one time rather than spending more money at smaller convenience stores throughout the week. Number 11. Always seek out lower prices. Think carefully about the people you give your money to. You might be able to negotiate a better price with someone else in many situations. Compare pricing for your home and car insurance, gas and energy bills, and even the grocery stores you visit. Most customers simply accept the price that is listed in the store. Never be reluctant to ask for a discount, especially when purchasing a large ticket item like a new car or appliance. Prices are typically more negotiable than you might have imagined. You might persuade a store employee, for example, to match a cheaper price promoted by a rival retailer. The best places to bargain are at auto lots, food stands, secondhand stores, and big box retailers. By transferring to a new supplier or store, you can always save a lot of money. Number 12. Life insurance is important. According to the Younger Self study from 2017, more than 1/3 of adults in the US lack health insurance. Life insurance serves as an excellent saving tool for you as well as for any potential heirs you may leave behind. Some insurance plans have a cash value savings component that grows as a result of interest or investments. Up to the amount equal to the premiums you've paid into the policy, you can withdraw that money tax-free. That's all we got for you today. I hope you liked it and learned something from it. Give the video a thumbs up and subscribe to the channel if you did. Share this video with an 18-year-old in your life if you're new and interested in more similar content. And if you have any suggestions for future videos, post them in the comments section below. We like helping you guys, and we strive to produce content that directly addresses your troubles. With that being said, enjoy your day, folks, and I'll see you in the next one.